What is up, guys? Hope you all are doing well. First off, I just want to say thank you so much for taking the time to invest into my course. I think you guys are going to learn a lot from it and love it, and I put a lot of effort into it, so I think you guys are going to find it very valuable. So, first thing I want to say is hopefully you guys can watch the entire course in its entirety. Don't skip any videos. Watch them in order. Watch them to its entirety. It's going to be very helpful because a lot of the videos tie together with each other. So without further ado, let's just go ahead and hop into the first video of what even is supply and demand and the types of supply and demand zones. So what are supply and demand zones? So supply and demand zones are areas of institutional price action. So that means these are areas where institutions, big banks, there's a lot of big money are trading, right? And banks, they're not right 100% of the time, but most of the time they are. And so they leave ways that you can follow their trades, and that's exactly what supply and demand is. So how to identify where supply and demand zones are. Now, the first thing, before I get into the speed and balance versus imbalance, first thing I want to notice is what markets are actually like and how they actually work. So a lot of them are built off of balance versus imbalance, right? So all these gray zones, this right here is an example of what a stock could look like, right? You have gray zones and then you have these black lines, right? So the black lines everywhere is price, right? This is all price. The gray zones are areas of consolidations, right? So when price is trading in a tight range, not a lot of movement, and then that would be called balance, right? That's balance. And then you have areas where price is inefficient. It's called an imbalance, where price goes really fast, doesn't spend a lot of time, doesn't consolidate, and those would be these in between the gray zones here, right? So you have balance, then it moves up, then you have more balance, imbalance, down, higher, lower. You got the idea. So how do you identify where supply and demand zones are? Well, it's about two things, right? One of them is knowing your balance versus imbalance, so knowing what a stock looks like, what a stock chart moves. The second thing is going to be speed, okay? And that I capitalized it because it's very, very important, right? Supply and demand zones are only caused by speed, right? So you can see here we have very fast price action, consolidation, very fast price action down, more consolidation, very fast price action up, right? So if you ever see price action that's, maybe we consolidate here like this, and then it just kind of goes really slowly, kind of choppy, down like this, I would not consider this a supply zone. And we'll get into more examples in the future videos, but right now, just a basic idea, two things, speed and balance versus imbalance, okay? So let's dive into the types of zones we have. So there's 4 different zones, right? We're going to just stick with demand for now, and then I'll get into supply in a second. So we have something called a drop-based rally and a rally-based rally. So going back to what we said with the balance versus imbalance, price drops, consolidates, and we have a fast price action move higher, right? That would be the rally. So drop, this is the base, and then rally, right? Pretty simple concept. Then the other type of demand zone is a rally-based rally. So price rallies, it consolidates, we have another fast price action move higher, that's another rally, right? So it's called a rally, base, rally. Very, very simple stuff, right? There's only 2 types of demand zones, and those are it. Supply zones are basically the same exact thing, except the opposite, right? So we have a rally-based drop, so price rallies, it bases, and then it drops. And then we have a drop-based drop. So price will drop, it will base right here, and then drop even more. So we have these little areas of consolidation, and we have areas of big price, very fast price movement, okay? So these are going to be your supply and demand types of zones. Now, I don't really call them out, DBR, RBR, RBD, DBD. I don't say that a lot. It's just the types of names to identify the zones. So that's something you can use in your trading if you do so. I don't really talk about it that much, but these are the type of zones and the names that they have. So what do the zones even look like? They're just the areas of consolidation, right? So if we go here, we have a drop, we have a base, and we have a rally, right? And so the thing I want to mention is your demand and supply zones. I'm going to be more specific and go actual, scenarios and look at actual stocks in the next video. But for these purposes, the price where the consolidation is, that's going to be where your demand and supply zones are. So these balance areas, these are going to be where your zones are, right? And you can just extend the chart out. So we look down here, price drops, we base, and we rally higher. We have that fast price action. What are we expecting? If we draw this demand zone out, right? So this was the consolidation. All I did was took a zone and I drew it out. What we would be expecting is price to come back into that demand zone and then a bounce, right? Because what happened is price comes down, a bunch of institutions load up shares, they bring the stock higher, they sell. And when price comes back down, there's unfilled shares that the institution needs to get filled. So what happens is price bounces out of that zone. And it's a very, very consistent pattern that you can use in your trading. And it's basically what I trade my entire strategy on, is supply and demand zones. It's a very repeatable process, right? So looking back, this would be a rally-based rally, right? So we rally, price bases, price makes another rally. What I would be expecting is when price comes back into this demand zone, I would expect price to make a higher move out of it, right? It may just bounce here, or might even go all the way up here, right? That's more for in the future videos as well. Going back here, we have a rally, base, drop. So again, price rallies, bases, and then drops. And then we would expect to move back to that supply zone, this consolidation. We'd expect more shorts to get in and price to move lower. And then same thing, price drops, bases, and then drops again. Price creeps up, hits that little supply zone, that consolidation area we had, and then ends up moving lower. So all in all, that's supply and demand. I gave you the 4 types of zones, how they work. You'd expect price to bounce off of them, institutions. Again, main things to consider are speed, right? So you need to be looking at how fast price is and looking at fast price action. And then balance versus imbalance, understanding how the market moves and what kind of market structure is created in all of these stocks and futures. So with that being said, that is the end of this video. Hopefully you guys took some notes and learned something, and I will see you all in the next video.